Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 24th of Feb, 2022. And the time is 17:35, that's 5:35 in the afternoon here in the United Kingdom. Now, it does not take a genius to identify the main news topic of the day. And that is obviously the invasion of the Ukraine by Russia. And a number of headlines refer to this, and it's had quite an impact on global equity markets, cryptocurrencies, gold and silver, and particularly oil. We'll briefly look at some of this, just as an update, because there are some reports that have come out in the last hour, and in some cases in the last 20 minutes. The main headline on Bloomberg is a triple hit to global economy, Wall Street on Ukraine crisis. We'll also look at Russia is aiming for a rapid destruction of Ukraine's forces, and then cryptocurrency is a potential new tool for billionaires to avoid sanctions, they think, and we'll have a look at that too. So just very quickly then, triple hit. Wall Street managers are rushing to price in the immediate fallout from the invasion of Ukraine, as the inflation fueling breakout in commodities clouds the monetary outlook. The harder task, figuring out how exactly the geopolitical fallout will hit all manner of cross-asset trades in the weeks to come. That's the initial reaction, at least from strategists, as the S&P 500 pairs losses to trade down 0.6% as of 11:20 a.m. in New York. Here's how traders are reacting to the unfolding crisis. Now, I won't go through all of them, but it's worth having a look there. Whether current market action is a correction or a bear market is irrelevant, according to Nicholas Colas of DataTrack Research. What we have is an information vacuum on two critical issues: the price and global availability of energy and US monetary policy. Until at least one of these two factors sees some clarity, we remain cautious on stocks. And now Russia's invasion of Ukraine is following a course many military analysts had predicted, with a barrage of missile attacks to destroy Ukraine's air force and air defences quickly, followed by a massive land campaign aimed at crushing armed resistance. Anyone who follows military strategy will see this as really being a typical approach. You destroy the aircraft, or perhaps where the aircraft take off from, i.e. their various airports and landing functions. Why? To prevent a counterattack, of course, from the air. And then you move your land troops in because you know they're not going to be bombed from above. Events on the ground unfolded rapidly on Thursday, and while the situation remains fluid, it appears that Russian President Vladimir Putin has opted for a campaign aimed at achieving regime change, rather than a more limited takeover of the separatist Donbas territories he recognized as independent on Tuesday. Going back to cryptocurrencies just very quickly, we're not going to focus on this, but it's worth looking at because those involved in cryptocurrencies may very well find that there could be some urgent legislation here. Cryptocurrencies may help Russia and its billionaires blunt the impact of Western sanctions. US President Joe Biden has promised severe sanctions against Russia, and the European Union says massive and targeted measures are being prepared in addition to penalties that were imposed earlier this week, after Vladimir Putin ordered his troops into the Ukraine. But those sanctions might carry less weight in a country that is taking steps to legalize cryptocurrencies and where the digital assets are already widely owned. Typically, nations employ physical workarounds to avoid sanctions, such as Venezuela and North Korea's use of ship-to-ship transfers of fuel, but digital assets like crypto and decentralized exchanges could become the most effective way to circumvent penalties. Neither dictators nor human rights activists will encounter any censor on the Bitcoin network, said Matthew Siegel, head of digital asset research at investment manager Van Eck. So, cryptos are the way to go, and we did wonder why Russia authorized cryptocurrencies just a couple of weeks ago. Let's see what's happened to the dollar. Lo and behold, surprise, surprise, money is flocking to the dollar. It's now exceeded 97. We predicted it would by March. It's happened ahead of time, and it's at 97.38. Anyone who tells you the dollar is doomed for imminent collapse, if anything proves it, an invasion such as this just shows you where money's flee to. And it's the US dollar, and will be until it's one of the last currencies remaining. Energy prices well over $100. Remember last year we pointed out that there were predictions that we could very well see oil prices hit $100. Well, we have it now. Brent crude's 102.76 and WTI crude is 95.85. If this battle continues, then we'll see those prices edge up even higher. Equity markets taking a plummet in Asian Pacific overnight, ranging from down 1.25 to 3.21 in Hong Kong. UK and European markets, major hit, obviously down as much as almost 4% for the DAX and the CAC and the FTSE, and 3.7% for the Euro stocks. And even Wall Street is taking a hit, not quite so bad because they're not so adversely affected as Europe. And we have the Dow down 2% at the moment, down 698 points. The S&P down 1.3 and the Nasdaq down 0.35%. Gold took off and we watched it this morning, but it has fallen back since. It's now at $1,925. That's up $15. But it did go as high as 1974. The fallback came about 3 hours ago. Silver, 24.76, up 21 cents, but was up as high as 25.64. Again, fallen back in the last couple of hours. And cryptocurrencies, the market's down 8.4%. Bitcoin's currently trading below 36,000. It was down even further than this earlier on. And Ethereum is down to $2,449. Markets taking a pummeling. That's it. This is the update. Where's it going to go from here? It really does depend now on the extent of the damage caused and the reaction from the West and the impact of sanctions. It's not looking bright at the moment. Some will argue it could be a good time to get into cryptocurrencies and equities, perhaps in a few days' time when things become more certain. For sure, we've guaranteed that we've got enough fuel in our cars. We prepared that on Sunday. Enough food in our fridges and freezers because we have no doubt, and in our larders, because we have no doubt that there will be a degree of panic buying as events such as these will actually cause. Let's keep our fingers crossed that it doesn't go too far in terms of the military response, and that some order will be maintained in the not too distant future. We're not holding our breath though. There was some economic data out today, and we'll cover that on the weekend, and we may very well give you a further update tomorrow. Thank you for listening. Please give us a thumbs up, subscribe, press the bell sign, and if you haven't done so, look out for our gold and silver 2022 forecasts, which have been published over the last couple of days. Link in the description box below. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.